Welcome to Charts Today. My name is David Linton, and today's edition for Thursday, the 8th of December, comes to you from London. And it's our Christmas party today, so just a short one, and I'm still on the tail end of a cold. And it's freezing cold in London at the moment. We're 1 degree Celsius. I woke up this morning to minus temperatures all over the UK and Europe, and so you would expect gas prices to be rocketing on that, but of course they've done that pre this because it's more about the forecast here. We're seeing European gas actually falling back a little bit. So we rose on the forecast, if you like. We had the targets in place well before that, but we are just seeing a little bit of a fallback, but prices are up about 1% today, so not that significant in terms of the price change, but significant in terms of the fact that we are in that turnaround and we're in the beginnings of a new bull trend, having found support at the 100 level, and that goes right back to a long-term sloping support line. So the energy crisis or crisis in energy prices is far from over. The long-term trend has been hit, and we're now entering a new phase. And of course, with this cold weather, we're going to be using up a lot of that stored gas. And if we look at MBP in the UK gas prices, that's going higher as well. We'll come back to the energy mix, but let's start by looking at the main market. So the dollar is holding back above 105. So that is really the critical level for the dollar at the moment. Likely we're going to spend a bit of time testing that level from above and below, but that is the critical level. Below there, we start to become even more bearish, taking out the August low. So that's significant and one to watch. Of course, we are seeing this turnaround in the trend of the dollar, so that's quite key. This is my weekly, my daily, and my 60-minute cloud chart. Above the cloud we're bullish, below the cloud we're bearish, and this is my long-term, medium-term, and short-term view of the market with the corresponding point and figure targets. So the euro is sitting at 105, just below 105, so holding those levels fairly steady. And looking at sterling, 121.65. We were high as 123 at the start of the week, so we have just seen a little bit of a come off there, but the reality is it's quite a recovery on that weaker dollar. And sterling against the euro nudging this 116 level. Again, we have been higher. We did get as high as 117, but still just seeing that gradual momentum of sterling outperforming the euro. Bitcoin sitting at 16,800, so back below the cloud on the short-term chart, having tried to hold above 17,000. So the fact is we are still looking bearish to these downside targets, one as low as 9,000 for Bitcoin. The markets in the US were off slightly yesterday. The Nasdaq still looking relatively weak there. The S&P E-mini this morning is up 0.1%, and the Nasdaq E-mini up by a similar amount. So we are just seeing the markets set to open relatively flat. Looking at the FTSE future, we're down 0.2%, still outperforming the US on the medium and long-term charts. Of course, we are just seeing a bit of a pullback. Oil prices falling will start to have an impact on the oil majors, which is major constituents for the UK market. The DAX in Germany down very, very slightly, so that's quite key, just hitting that resistance on the weekly cloud from below and back into short-term bearish move there, but no clear downside targets in the process. Looking at the Chinese market, down very slightly. The Hang Seng was up 3.4%. It was down by as much the previous day. So we're seeing a lot of volatility in the Hang Seng as we really start to just try and test getting through this daily cloud. We see the lagging line really just messing around in the cloud there. And if we look at the Indian market, that was up 0.25%, of course, recently making new all-time highs. Looking very bullish indeed, and the Aussie market down a further 0.75%, so not so good there. Looking at gold, we're sitting at 1783, just can't get back above that $1,800 level, but 1780 was the previous high, so anything above that is good, and we are seeing that medium-term trend for gold. The weaker dollar helping gold, of course, as well, so that's quite good news. And silver, we're seeing here, silver also just looking a bit stronger as well, above $22, really now reaching for $23, so that's quite significant too. Looking at some of the US 10-year yield sitting at 3.44%, falling further. Remembering the Fed funds rate is 4%, So the bond market's really discounting any further rises in rates, and that 0.6% differential is quite significant and unlikely to stay there for long. So it'll be interesting to see what happens next from the Fed. Looking at the markets now, we've got Brent Crude sitting at just having really dived, looking weaker there, and looking at coal prices, interesting there. We're just hitting resistance as well. We've looked at the gas prices already. German power, quite an interesting one there. We're just seeing that recovery. And on Cal 24, which is next year's contract, which we're starting to look at more seriously, we're seeing 3-month new highs there. So that's significant. 291 was the target there, and we are sitting at 288. So that target 291 was given right back in the low 270s. So quite interesting that we're seeing that target being met. Last of all, a quick look at the carbon price. Quite interesting there. We've talked about this morning on LinkedIn. We've got a consolidation pattern, move into the pattern, then the consolidation, and normally the move out would be similar. And so we can look at the carbon contract and just see the targets there. New downside target there. We've got to watch them. This is the 1 minute. You've got to watch those targets developing just in case we do get a failed breakout. But for the moment, this 89.80, so let's say 90 is the target. And of course, we will get a new target on this column as well and on that column. So we could see carbon prices going much, much higher. That's it for today. Until tomorrow, happy charting. See you then.